What's up, folks? Welcome to another Money Smarts lesson brought to you by ATM Financial Services. My name is Herman Williams and I'm the owner of ATM Financial Services, and I'm a personal financial advisor. I'm also a certified financial education instructor. My goal with these lessons is to arm you with the knowledge you need to make the best financial decisions you can for you and your family. It is also my hope that you will come to understand that your financial behaviors is what determines your ability to build wealth. Now, with that being said, why don't we go ahead and jump into today's lesson. But before I get too far, let me go ahead and give you my disclaimer. Nothing that I'm about to say is to be taken as a recommendation to buy or sell any security. Trading securities always comes with risk, and you should always make sure that you understand that risk before trading any security. So today I want to talk about meme stocks. This trading concept seems to be all the rage thus far in 2021. But what are meme stocks, and how can you make money by investing in them? Well, let's talk about what they are first, and then we'll get into how you can make or lose money by trading meme stocks. I'm sure most of you know what memes are, but for those of you who may not be internet savvy or a social media guru, tech terms, which is sort of an internet dictionary, defines a meme as follows. A meme is a concept or behavior that spreads from person to person. Some examples of memes that you may be familiar with are things like this face of Michael Jordan crying, which has been used to poke fun at a lot of different situations. Or what about this one, which happens to be one of my favorites? It's the woman yelling something at a cat, and the cat always has the coolest comebacks. But here's one that I think is more applicable to today's lesson. You can see that the caption says, one does not simply choose any old picture and expect it to go viral. Well, that same theory can be applied to investing in meme stocks. Just like with social media, when a large group of people or investors decide that they like a particular security or stock, the word spreads pretty quickly, and if enough people buy enough shares, the price can increase rapidly. You could say that the stock has gone viral. That's what makes it a meme stock. And just like an internet meme, a stock meme can fade just as quickly as it became popular. That is what makes meme stocks so volatile. More often than not, the sudden run up in price will far exceed the intrinsic value of the security. And the market is always efficient enough to correct itself. Sometimes corrections happen quickly, and sometimes they can take a while to get back to a reasonable valuation. So then the question becomes, should I invest in something that may just be a fad when I don't know how long the fad will last? Well, to answer that question, I think we need to look a little deeper into how this meme stock process works. Believe it or not, there is a method to the madness. First of all, you need to understand that the majority of investors that are driving these meme rockets are communicating on various social platforms such as Reddit and Twitter. There are also subgroups on these platforms such as Wall Street Bets, which is a group on Reddit. Some of the people in these groups are experienced investors and others are novice amateurs. But they all have one thing in common. They are all hoping to make a lot of money. And a lot of them do make a lot of money, but a lot of them also lose a lot of money. It all depends on whether or not you're able to execute a profitable buy and sell strategy. Panic buying and panic selling will absolutely kill you with meme stocks. Now let's say you're on one of these social platforms and you start following a thread about a particular stock. Now you don't know a lot about investing, and you know even less about how to value a stock or company. So you're just kind of watching and listening. Then you see the stock price start to rise, but maybe you're still a little skeptical. Now the stock starts to rise by leaps and bounds, and you're afraid you're about to miss out on a viral profit-making opportunity. So you jump in and buy as many shares as you can. Now the stock has already tripled in price, but this rocket is going to the moon, so you're just glad you got a seat, right? And maybe the stock price goes to 5 times its original price. Now you're really feeling good and maybe you buy more shares. But how do you know when to sell? This is where a lot of people start to exhibit the wrong behaviors when it comes to making a profit on their investment. When a meme stock is going up rapidly, it's easy to assume that it will continue to climb. If you haven't heard any bad news about the company, why wouldn't you believe that it will continue to go up? You don't want to sell too soon because you would be missing out on some profit, right? So you hang on and then suddenly the stock price starts to dip. But you are still riding this adrenaline wave, and so what if your paper profit went from 500% to 400%? You're still way ahead, right? But then the stock price starts dropping faster and harder, and your heart starts beating faster and harder. And now you exhibit another bad behavior. You panic sell. You dump everything for whatever you can get, and maybe you end up with a low profit, or maybe you end up with a big loss. I can tell you that with the volatility of some of these meme stocks, all of the above are possible. GameStop is probably one of the best known meme stocks, so let's talk about what it has done year to date. On January 11th, GameStop closed at $19.94 a share. On January 27th, it closed at $347.51. That's a gain of 1,643%. But then on February 18th, it was at $40.69. If you bought at $347 and sold at $40.69, then you lost 88% of your money. But wait, on March 10th, this stock was back up to $265. If you bought in at the $40.69 price, then your paper profit would have been 551%. Now the price of GameStop has continued to fluctuate pretty wildly, and on June 11, 2021, it closed at $233.34. So here's what you need to know about meme stocks. I mentioned earlier that there is a method to the madness. Well, part of that method, at least so far anyway, has been to target stocks with heavy short interest. When investors short sell a stock, they're actually betting that the stock price is going to go down. The way it works is they actually borrow X number of shares and immediately sell them at the current price. If the price goes down, then they buy the same number of shares at the lower price and return them to the lender. The difference in price is their profit. When the GameStop saga began, these savvy investors on Reddit, Wall Street Bets, Twitter, and other groups had two goals in mind the way I see it. They wanted to buy shares in big volumes because they knew that that alone would drive up the price, but they also probably knew that when other investors saw the price going up on GameStop, they would jump on the bandwagon and drive the price up even more. By the way, Reddit alone has over 10 million users. The other thing that this group wanted to do was stick it to the big boys. The big boys were hedge fund managers and other short sellers. I would have to say that they succeeded at that as well, at least initially anyway. There were some short sellers who had sold those borrowed shares at $19 or $20 and then had to replace them with shares that cost them over $300 each. Ouch. But in my opinion, what these investors have also done is created more short sale opportunities with the potential for even greater profits. Look, here's the thing about most of these meme stocks. The basic business fundamentals that determines a stock's true value don't change simply because a stock goes viral. GameStop has been losing money for years, even before the pandemic. Like many businesses, they simply did not keep up with the transition to online sales and streaming content. And even though the company has brought on new leadership, they won't be able to produce earnings that will support the current stock prices. So does all of that mean that you shouldn't invest in meme stocks? No, that's not what I'm saying at all. What I am saying is that if you're going to get into this game, you better come prepared with the right behaviors, or I can almost guarantee you will get burned. As I said in the beginning, you must have a buy and sell strategy that gives you the best opportunity to make and keep your profit. Not only do you need to have the right mindset, but you also need to use all the tools at your disposal. When buying these meme stocks, always use limit orders. Try to get in early, but if the price is already starting to get volatile, using limit orders will limit your purchases to a price that you set. Once you have made your purchase, then use stop loss orders to protect your profit or limit your loss. With this type of order, you preset the price that you want to sell your shares. If the stock you purchase has gone up by 50%, then set your stop loss price at 10% below that. That way you still walk away with a 40% return on your investment. Also, if you're going to invest in these meme stocks, then you need to become part of the conversation about these stocks. Join some of these groups and listen to what is being said. You'll find that some people sound very knowledgeable and some really don't have a clue, but they're trying to learn. Whether or not you choose to invest in meme stocks is your decision. I'm not trying to sway your decision one way or the other. What I am trying to do is teach you the behaviors that will give you the best chance at success. And you know what I always say, if you change your behaviors, you can change your life. So until next time, behave well.